Today is December 7th. It's a special day in my heart for me because today is a day that we get to celebrate Pastor Chris. Today is his birthday. Uh, so Pastor Chris is not here, but I honor him so much because his teachings has had a positive impact in my life. So happy birthday, Pastor Chris. All right. So let's go. Let's continue. We are recording already. So we spoke about, let me reduce the music a bit so that it doesn't overshadow my voice. So we spoke about this. You can see where we came from. If you remember this GBP from the daily, right? You can see the 4 hours time frame. We had a breakout to the upside. It's as simple as just understanding. See now, the way we are able to build the bias is just simple. We swept the previous daily high, right? We swept the previous daily low, went straight, to the upside. Then the 4 hours gave to us a breakout to the upside, to most recent breakout to the upside. So what we have is A-shaped key level got disrespected. So let's say, for example, you were hesitant on taking this trade from this particular place, right? You needed to see liquidity that needs to be created. All you have to do is move straight to the 1 hour time frame, right? Or the 2 hours. You have to short between 1 hour and 2 hours. And you see the next candle that got created was served as an internal range liquidity. And every day, right, you need to remind yourself that the market has two responsibilities: to attack liquidity and rebalance the holding balance at a specific pricing level. You can see what price did. We attack liquidity, rebalance this holding balance, and we just continue to rally up to the upside. So even when you look at something like this as well, right, some brokers will not have tagged you, right? These were just extra entries. So for example, when you move to the line chart, because we use the line chart a lot, the stories in the line chart, the body, right? So you can see what we have here. The same thing that we have here, A-shaped key level that got disrespected to the upside, right? After the A-shaped key level got disrespected to the upside, we closed above it to the body. You can see price tapped into that same level 1, 2, 3, 4 before it started to move, right? Another space you can actually see is that when you move straight to the line chart, you can also spot this A-shaped key level here that got disrespected, right? So what did price do, right? So you can see what price did here. We took out this particular liquidity. After taking out this single candle again, remember what I said, single candle formation serving as internal range liquidity depending on your structural formation. So internal range liquidity was swept. That same candle is going to serve as external range liquidity. So you see what price did. We attacked the liquidity that is here, came back to the A-shaped key level that got disrespected. It repeats itself I don't want to say all the fucking time, all the time. So we swept liquidity, came back to the A-shaped key level, and we went straight to all of our external range liquidity. So that is what I'm saying to you, that the concept of advanced structure is just to actually, there's nothing advanced about it. It's just price just moving from one point of liquidity. So price takes out internal range, goes for external range, right? So we had a sweep of liquidity, single candle formation, internal range liquidity that is resting very close to an A-shaped key level that got disrespected. The same way we have an A-shaped key level that got disrespected on the 4 hours, right? The 4 hours A-shaped key level is the 1 hour open close, right? So internal range liquidity swept, price rebalance and holding balance at that same key level that got disrespected. The same thing happened here. A-shaped key level got disrespected to the upside with an impulsive move. This thing would have played with your mental health. Imagine price tap your entry, move, tap again, move, tap. After it has gone far like this, some of you would have gone break even. Only as you go break even, because you see this particular move, price has gone, you will go break even. Only for you to go break even. This next candle will come back, take you out at break even, and you'll just see price go in your direction, right? So you will see that the same thing is happening everywhere. A-shaped key level got disrespected to the upside with an impulsive move. Price came back there 3 and 4 times before moving, right? The same thing we have on the 1 hour time frame, right? You can see the reason why we are just going to be looking for buying opportunities is because we started from the monthly time frame, monthly rejected monthly time frame, weekly rejected weekly, gave to us a daily breakout, and the 4 hours also kept giving to us most recent breakout to the upside. So on the 2 hours on the 1 hour time frame, in respect to the other time frame buyers, we are just going to be looking for buying opportunities in that same direction. So you can see A-shaped key level that got disrespected to the upside, internal range liquidity resting very close. We swept the liquidity, came back to that A-shaped key level that got disrespected, and straight up we went straight to the external range liquidity. So if you are doubting again, you can see the same thing again on the 1 hour time frame. You can see A-shaped key level move straight to the line chart. What can you see? It's not magic. This is just, it's a very simplified approach. I'm not capping. Look at this again. So what do you find here, right? You can see on the 1 hour time frame, can you find something called our most recent breakout? you can see the most recent breakout, right? We broke above these two structural points, right? So we had a breakout, this particular impulsive candle that broke above it. So what do you find about it, right? Contextually, you can see the moment we broke above this particular structural point 1 and 2, the next thing you need to see is that you can actually spot that price created for us an imbalance here. The moment you see things like this, you just know that you have free food to eat already, right? So you can see this A-shaped key level that got disrespected to the upside that is also overlapping inside of an imbalance. The next thing you want to see is that, look at this single candle formation that is going to serve as internal range liquidity. So there are two things you only want to see price do. You want to see price attack liquidity, rebalance the old imbalance at a specific pricing level. So the only problem where the only issue you should have is that the moment you spot things like this, ask yourself, if price wants to come to rebalance an old imbalance, ask yourself at what pricing level is price going to rebalance it? We swept liquidity, we came back to the A-shaped key level that got disrespected to the upside with an impulsive move, price closed above it as a body. At the moment we had that, you can see this from this point, look at this, to all of this, right? So 11 pips max for a trade like this, depending if you're a very conservative trader or maybe you're, this is even from year to year is a very, this is already 6 pips, so let's make it 7. So from year to year, right, down to where we are here, before that healthy drop, is already 1 to 8, right? Simple context that repeated itself over and over. Key level got disrespected, overlapping inside of an imbalance. Liquidity needs to be swept, imbalance needs to be rebalanced. I tell you, there are only 2 responsibilities you have as a trader. Learn bias and learn entry. Pick one entry model. I taught our guys 2 entry models. We have the origin setup and the continuation setup, right? So pick one entry model and die on it. Just go down the rabbit hole on it. You can see how it repeated itself here. 1, repeated itself here. 2, 3, repeated itself 4. The beautiful thing about this one is that the key level that got disrespected is overlapping inside of an imbalance, right? It got disrespected. Also, we have the single candle formation that is going to serve as internal range liquidity. So you can see that same single candle formation that is going to serve as internal range. You can see it's also going to serve as external range. Serving as external range, that would just be like the first external range price should take. But we know overall where the external range liquidity should be, right? The overall external range liquidity should be actually this high, but you can see how price continue to move. I mean, heavy momentum kicked in. I remember in our early days when we just started, right, how time flies, right? We used to say a word that if the key level is right, once we kick in, momentum is going to kick in. Everybody remembers that, right? So you can see this, right? And the beautiful thing is, I didn't partake in these sales, but you can almost spot. Let me train your eyes to see something. We said let me quickly reiterate and train your eyes to see something. We said every A-shaped key level should be used for what? A-shaped key level should be used for sales. The moment A-shaped key level that should be used for sales gets disrespected to the upside with an impulsive move, closes above it as a body, it means the A-shaped key level is going to be used for what? Buys. Every V-shaped key level should be used for buys, right? But the moment the V-shaped key level gets disrespected, closing below it as a body, the V-shaped key level is going to be used for selling opportunities. Simple. Move straight to your line charts. What can you see? After all of this rejection, right? From this high, we dropped down. We're going to see where we are coming from that particular high. So when you move to your line chart, because the story is in the line chart, you can see this A-shaped key level that got disrespected twice. The A-shaped key level that got disrespected twice was still, look at this. This A-shaped key level that sponsored all of these buys to the upside got disrespected to the downside with an impulsive move to the downside. Price closed below it as a body. Price still came back to that same level and dropped, right? Even though it didn't drop like so much. But remember what I said to you, right? On the 1 hour time frame, let's say you were very scared. You didn't want to take it from this A-shaped key level that got disrespected to the downside. So you were very scared. Let's scale 1 time frame lower. The same way we did from that 4 hours. Everybody remembers where we are coming from, right? Don't forget. Look at this. So remember what we did on 4 hours. Remember that 4-hour setup, right? That 4-hour setup, we had an A-shaped key level that got disrespected, right? Price just tapped into the 4-hour key level. But when we move 1 time frame lower to the 1 hour, we saw that the 1 hour candle that dropped served as internal range liquidity. Price swept the liquidity and then momentum kicked in. We started to buy. So if you look at that, that is the same mindset. It's the same thing everywhere across all markets. Patience. So look at this. A-shaped key level sponsored all of these buys to the upside. Makes a lot of sense. That same key level got disrespected to the downside with an impulsive move. Because let me tell you something. This A-shaped key level that sponsored all of this move, you can see the only thing that we saw here is the wick. But the beautiful thing is the story is in the body of the candle. When you move to the line chart, you can't spot that wick anymore. So what is this wick? This line chart is saying to you. The line chart is saying to us that this A-shaped key level got disrespected 1, got disrespected twice. But when you move to the candlestick, you will see that that same level that got disrespected twice sponsored the first buys to the upside. Are you seeing the logic, right? This is why we put logic over any pattern. So, but this is what I want to show to you. So look at this. A-shaped key level that got disrespected twice, even though we know that this A-shaped key level sponsored all of these buys, it got disrespected twice. Second time to the downside, price closed below it as a body. So if you were afraid, you needed extra confirmation to take this trade from the 1 hour, move straight one time frame lower to the 4 hours, right? As it is on the 4 hours, so it is on every other time frame. So what do you have here? Imbalance that needs to be rebalanced. Refine it a bit. Back to this 30 minutes. Back to this 30 minutes A-shaped key level, right? When you move straight to the line chart, A-shaped key level. Now, the A-shaped key level got disrespected 1, 2. Forget about all of these weeks that you are seeing. The stories in the line charts, right? The line chart only captures the body, right? So you can see A-shaped key level got disrespected twice. The beautiful thing is that this level that got disrespected twice is overlapping inside of an imbalance, right? So single candle formation is going to serve as what? Internal range liquidity. Don't forget. Forget to eat breakfast and lunch, but don't forget this. The moment the single candle serves as internal range liquidity and this low serves as external range liquidity, what does it say to you? Contextually, what do you have here? That the market is looking to do two things: attack liquidity, rebalance and hold imbalance at a specific pricing level. Ask yourself, at what pricing level price came back to this level? There are some who would have actually wanted to take it from this level. It's still the same, right? You can see the same thing. If you took it from this level to rebalance and hold imbalance, you are correct. If you took it from this level to short, you are still correct. The same context. Move to trade to the line chart. Every V-shaped key level should be used for buys. But the moment the V-shaped key level gets disrespected to the downside with an impulsive move and closes below it as a body, that same level is going to be used for sales. Look at this. V-shaped key level that should be used for buys got disrespected to the downside. Price used it for sales, and you can see the healthy draw. So those who sold from here to rebalance this old imbalance, they were right. Those who also sold from this particular V-shaped key level that got disrespected, you are both all, everybody's right? So let me show, we have been on G for a very long time. Let's move to another pair. NZD-USD. I'm showing you something you can use to study, in fact, this week, right? Trade crypto, go back to synthetics. It works everywhere. Look at this. Look at this. When you look at the monthly time frame on, let me check the chart. Sorry. The chat session keeps distracting me, I promise you. So let's go ahead. So look at NZD-USD, right? If you are struggling as maybe clumsy or whatever it is as this chart looks, if you are struggling to be able to understand the directional bias, right, it's okay. Start from here. Old monthly high was swept. After the old monthly high was swept, simple. There was no key level that you can spot here on the monthly time frame that maybe price reacted from or whatever it is. But when I pay attention to the monthly high that got swept, look at this. Two criteria were already met on the monthly. We swept the old monthly high. We closed below. That's all. Simple thing. Then what do? We move one time frame lower to the weekly time frame, right? Are you seeing what we did? Where's that guy now? The guy I can't find the. Where's the stuff? So monthly, what month is this? This is September 2024. So we swept this particular high. So September 2024, we move one time frame lower to the weekly, right? I'm wondering why I can't find it on the weekly anymore. This is it now. Why is it not showing? So we had this particular previous weekly high was swept. After that previous weekly high was swept on the monthly time frame, we closed below. And after closing below, you can see what the weekly did, right? I told you the first criteria has been met. The second criteria, price gave to us higher low, higher high. We had a break of structure. And after the break of structure, you can see how the momentum just continued to move to the downside. So on the weekly time frame, if you want to build bias, I mean, monthly is already bearish. Weekly has confirmed that we are bearish because monthly rejected monthly. Monthly swept the previous monthly high close below. Then we have the weekly that gives to us a break of structure. You can see the break of structure here. Everybody can spot this break of structure here that is beautiful line here. So you can see this where price came back to on the weekly time frame. V-shaped key level that got disrespected. I guess so. So, but when you look at this as well, what do you have? Single candle formation that is going to serve as internal range liquidity. Liquidity that needs to be swept, imbalance that needs to be rebalanced, right? So you can see on the weekly time frame, we swept this particular liquidity, right? So you can see how we just continue to sell. Monthly is bearish because we swept an old monthly high, and the weekly gave to us a break of structure to the downside. So you can see the reason why NZD-USD has just been bearish all through, right? Are we going to have buys? Yes, we are going to have buys, but it's going to be short term. The overall momentum is going to be to the upside. We swept the previous weekly, monthly high, the weekly high. If we move on time frame lower to the daily, look at this now, guys. Just look at this. Don't forget, this is a weekly time frame that we swept. It's just simple context. Weekly rejects weekly, daily must give you a break. Weekly sweeps a weekly high, daily must give you a break, or it must recent breakout. It's simple. So this is a previous weekly high that we swept. Back to this again. Let's look at this. Where's that guy? So you can see this. This is a previous weekly high that was swept. Definitely after the previous weekly high, we'll go for previous weekly low, and price will continue. Remember how I gave to us that example? Week 1, week 2, week 3. So we expect week 3 to just continue to drop to the downside. So when we move on time frame to the daily time frame, you can see what price did, right? So this was that previous weekly high that got swept. And after the previous weekly high got swept, move straight to the line chart. Do you see anything like a break of structure? Yes, sir. We had this break of structure to the downside, right? So the break of structure we have on the down to the downside, what does it say to you here? Right? It's very clear. Even a blind man can see it. What do you have here? V-shaped key level that got disrespected to the downside with an impulsive move. Price closed below it as a body. Price came back to that same level. So we have to move on time frame lower to see if there was a 4 hours internal range liquidity that was created after we disrespected this particular daily level. My God. Are you seeing it now? Look at this. 4 hour V-shaped key level that got disrespected to the downside. Price came back to that same level, right? We have this 4 hour high that is going to serve as internal range liquidity. So V-shaped key level that got disrespected, overlapping inside of an imbalance, right? Internal range liquidity needs to be swept, imbalance needs to be rebalanced, right? Stop loss around this area, maybe here. If you don't have a very good spread, a broker that has a good spread would have taken you out if your stop loss was here, right? But some brokers will not take you out. As you can see, we just dropped to the downside. But if we investigate from the 4 hours, let's move straight back to the 2 hours. Let's see what the 2 hours has for us. So back to the 2 hours time frame, you can see what we have here. Another V-shaped key level that got disrespected to the downside with an impulsive move, right? Price came back to that same level, and we had some healthy drops. So back to the daily time frame, right? Monthly is bearish. Weekly give to us signs of bearishness that we are also still bearish, right? So when we move straight to the daily, you can see this was the previous weekly high that got swept. We had a break of structure. Price came back to the V-shaped key level and continued to sell. So what do you have here? Look at this. We had this lower low, lower high, lower low. Most recent break of structure is to the downside on the daily time frame. What do we have here? Internal range liquidity. Above the internal range liquidity is a daily open close. Can you see the daily bearish open close? Are you seeing that now on the daily time frame? But I want you to just pay attention to what I want to share. So now the daily swept the previous daily high, which is a liquidity point, came back to the bearish open close, 2 consecutive candles to the downside. Because overall, all of this the most recent breakout is to the downside. We had this breakout here. So price swept this liquidity, came back to this particular open close. So 2 conditions were met. We reacted from this what do they call it now? Bearish open close below, swept this previous daily high, close below. So when we move on time frame lower to the 4 hours, we should expect either a break of structure or a breakout to the downside. Simple. You know, life no hard. It's just simple context. If it is not, see, if you take a trade, know why you took that particular trade. So you can see on the 4 hours time frame, we came to look at this V-shaped key level got disrespected. That was where price came back to. We had what? Internal range liquidity that is resting above it. So what did we do? This is a daily key level. Don't forget, we are coming from the daily time frame. Daily reject daily. What did the 4 hours do for you? Look at this structure now. don't neglect the basics of structure. Look at this. Look at this. Price gave to us a higher high, gave to us higher low, higher high, higher low, higher high. Break of structure. We broke structure on the 4 hours. The moment we broke structure on the 4 hours, the 4 hours has now confirmed that we are still bearish. Don't forget the overall structure, the overall bias from the monthly and the weekly is still bearish. So now daily reject daily, 4 hours give to us a breakout to the downside. So if you look at this, you can see what we did here. Our breakout structure was to the downside. After we rejected from the daily, we broke out to the downside. So what do we have here? Internal range liquidity that needs to be swept, right? And what do you have? 2 consecutive candles to the downside, or better still, look at this. A-shaped key level should be used for sales. We swept liquidity, came back to the A-shaped key level on the 4 hours time frame, right? And we just continued to sell. So let's investigate if we have like something on the 1 hour or 2 hours where internal range liquidity was created very close to this before we had those LD drops. So we start from the 2 hours time frame. Nothing. We move straight to the 1 hour time frame. Beautiful. Look at the 1 hour time frame. This is all you needed to see. Single candle formation. Remember, just like we had that sell, that buy on GBP USD, where the next candle served as internal range. Look at this. Internal range liquidity, single candle formation, internal range liquidity was created. Price swept that particular liquidity, came back to the 1 hour open close, and look at this. We just continued to drop to the downside, right? So when we pay attention to what the 4 hours is actually saying to us, right? The 4 hours most recent breakout again is to the downside, right? And after we broke out to the downside, look at where price came back to 2 consecutive candles to the downside, created a bearish open close, right? The 4 hours high served, this 4 hours high served as internal range liquidity, single candle formation, internal range liquidity, and we just dropped from there. If we investigate that same level again to see, right, let's see 2 hours, same thing. 1 hour also the same thing, right? So what we have on 4 hours is what we have on the 2 hours and also on the time frame. And you can see how the entire momentum is to the downside. So if I were you, what would I be paying attention to next week? I would want to look for more sales to the downside on GBP, on NZD USD. The reason is because our most recent breakout is already to the downside already. We broke below this particular V-shaped key level, closed below it as a body, and after closing below it as a body, right, so we expect that this level should hold. Internal range liquidity created, sweep of liquidity, price plays out from that level. This low needs to definitely go. This low needs to go, right? So I'm showing you how it works. So back to GJ. Somebody said GJ. So GJ from the monthly time frame. So GJ back to the monthly time frame, easy peasy, right? When we start from the monthly time frame, we know where we are coming from. We've said it already before in some of our videos, right? On the monthly time frame, because the buy started from here, the buys actually started from this. The buys actually started from this particular V-shaped key level that got disrespected twice. That is what people call QM, right? So, but when you look at it, price rejected from the monthly, closed above. When you move straight to the weekly time frame, you will see where price gave to us a break of structure, right? So if you look at the monthly time frame, right, 2 consecutive candles to the upside. This one created a bullish open close that got disrespected twice. So we had a monthly reject monthly, and we move on time frame lower to the weekly time frame. We want to see a break of structure, a breakout to the downside, right? So you can see all of this. Monthly reject monthly, we had a break of structure to the downside, right? After we have this break of structure to the downside, we had some pretty little buys, but pay attention to why we are still bearish on this particular guy, right? I think we can have some bullishness next week because of what I'm saying. So when you pay attention to how to build bias with both key levels and liquidity, right? Look at this. This previous weekly high got swept, right? But after the previous weekly high got swept, where the price reacts from, look at this single candle formation that is going to serve as internal range liquidity, right? That liquidity got swept. Then we have an imbalance that needs to be rebalanced, right? So market has to satisfy those 2 conditions: sweep of liquidity, rebalance, and overload imbalance. At what pricing level? Everybody will remember that we're looking at price reacting from this particular A-shaped key level, right? But look at where price came back to. two consecutive candles to the upside created a bullish open close. So what did price do for us on the weekly time frame? Price swept this particular liquidity, reacted from this bullish open close below. Move on time frame lower. We want to see some confirmation that we are bearish. Did we get a confirmation that we are bearish? Yes, sir. What did we do? We broke this structure to the downside. So weekly reject weekly, we had a break of structure to the downside. And after the break of structure to the downside, there was never any reason for us to buy any more. Look at how we just started to sell. Most recent breakout to the downside. Look at this. We don't have time anymore. We have a few minutes left. Most recent breakout to the downside. Look at where price came back to. This spot dropped again. Most recent breakout, drop. Most recent breakout, and all of that. So the reason why I want to see some, I think personally, the reason why I might want to see some buys next week is because look at what price did here already. We had an imbalance here that needs to be rebalanced, right? Old imbalance. So price took out this previous weekly low, old low, internal range liquidity that needs to be swept. So the conditions for this week has been met. So you remember what we said, use this one candle as week 1, use this next candle as week 2. So we have swept this particular liquidity. We have come to rebalance this old imbalance at this spot. So 2 things has already happened, right? Sweep of liquidity, rebalancing of an old imbalance, and we have closed above. So we don't know, there's nothing on the weekly time frame that shows to us that price is reacting from a particular level. But if we pick out from where this price started to reject, the 2 conditions has been met already. Sweep of liquidity, close above. Maybe we reacted from a level here, but we have also closed above. So if we move one time frame lower to the daily, we might be able to see maybe a level that we reacted off from. Let me spot. Mute your mic. Somebody's mic is unmuted. I'm not pleased. So you can see even on the daily, we really cannot spot a particular level that somebody's mic is unmuted. I will remove you. Morgan, please mute your mic now. Okay, they said it's reacting from a V shape on the left side of the weekly. Ah, beautiful. Back to the weekly now. Let's see something. I can't spot anything. I can't spot the V shape on the weekly now. I can't use this weekly. I can't use this one, no. Okay, beautiful. Ikem Clinton, thank you so much. We have context now. Let's use what our brother showed to us. V shape. Oh, this is Clay. You know, I'm not really a newcomer though, but it's accepted nevertheless. Look at this. We swept liquidity. God bless you, sir. Thank you so much for showing this to us. We swept liquidity. It shows that people are paying attention. Sweep of liquidity, rebalancing of an old imbalance at this specific pricing level. Forget about all this noise you are seeing. Move straight to the line chart. What will you find? V-shaped key level that got disrespected. 1, 2, 3, 4. The last point where it got disrespected, the beautiful thing is that same level is overlapping inside of an imbalance. So we want to see price do 2 things: attack liquidity and rebalance an old imbalance at a specific pricing level. So we came to rebalance this old imbalance at this specific pricing level. So 2 things has been satisfied, 2 conditions. Number 1, we have swept the old previous weekly low. In fact, we have swept an old low from last week, right? And we have also closed above all of those lows, right? The old low we swept, we closed above, right? This low, this imbalance that came to rebalance at this specific pricing level, we closed above. So the 2 criteria on the weekly has been met. So let's say we are moving straight to the daily time frame. On the daily time frame as well, we want to see some beautiful rejection. Right? We want to see either price give to us a breakout or a liquidity sweep and a break of structure. So we don't have anything on the 4 hours on the daily yet, right? You can see there's no breakout on the daily. There's nothing at all. So we can't force it yet, right? If we move straight to the 4 hours, 4 hours could give to us something beautiful like a break of structure, right? Look at this sweep and a break of structure. But because of what the daily has not given to us yet, and we can see where daily is reacting from already. So you can be as patient as you want to be to wait for the buys if it's going to be clean. But you can see what daily is giving to us, because on the daily time frame, when you move to the line chart, the most recent breakout is still to the downside. Forget about all those things that weekly is showing to you. Daily is not in alignment yet, but daily is now giving to us most recent breakout to the upside, to the downside. And the next thing you can also spot is the previous daily high. This previous daily high served as internal range liquidity, flexibility. Look at this. If you take out the previous daily high reacted from a S-shaped key level, what that means for us, remember, week 1, week 2, week 2 swept the liquidity reacted from the key level. It means that coming week 3, we want to see this particular logo. We want to see some sales onto this particular logo. So if we are coming from the daily time frame, most recent breakout is to the downside. Internal range liquidity has been swept. Price came to the A-shaped key level. We have to move one time frame lower straight up to the 4 hours. What has 4 hours done? Can you see it? Look at 4 hours. Look at the structural formation already. We're about to round off. We have 1 minute left. I'm not sharing another link. Higher high, higher low, higher high, break of structure. So daily and 4 hours is in alignment with the daily, right? Daily rejected from a daily A-shaped key level. We came straight to the 4 hours. And 4 hours has given to us a break of structure to the downside, right? So it means that we want to see some sales until number one, this previous daily low goes, right? In fact, we might just continue to see sales until this low goes entirely, because daily is not yet in sync with the weekly time frame. Weekly has rejected weekly, but daily has not given to us a break. But right here, we still have daily reject daily, 4 hours has given to us a break of structure. So we want to look for selling opportunities coming from next week until this low is taken, until daily now gives to us something otherwise, right? I wish we could share one more link. We've spent over an hour on the call. With this little thing that I've shared with you, go and make use of it. Have a good night, everybody. I'll think about the link should be shared. This recording should be shared or not. Good night. Have a good weekend. Don't forget to trade crypto and synthetic. Use what I've taught you, right? Bless your heart, bro.